What if we told you that the whole world is controlled by one elusive company? And no, it's not Intel or Google. In fact, the companies Intel and Google make up the tiniest fraction of the 5,832 companies that are wholly or partially owned by this mammoth corporation, which sits on the highest level of the economic hierarchy. This trillion-dollar top institutional holder firm controls famous successful businesses like Coca-Cola, PepsiCo, Microsoft, Intel, Tesla, Amazon, Apple, Facebook, Disney, and Nike, just to name a few. The list is so long that it would be more challenging to name a company that has remained untouched by this firm than to find one that is a part of it. So it's safe to say that they directly or indirectly influence our lives in a prominent way through their limitless reach and power. Everything seems to be under the authority of this single organization, from the food we eat to the apps we use to the clothes we wear. They even control what we watch on television by owning 90% of the world's media. They own 18% of Fox, 16% of CBS, 12% of CNN, and 12% of Disney. Today we will look at BlackRock, the world's largest asset manager with 18,400 employees currently managing $10 trillion in financial assets, amounting to a quarter of the money in circulation globally. BlackRock has come a long way in just the span of 34 years. It has transitioned from a mere asset management company to now being deemed the most powerful company to ever exist. When thinking of large-scale financial institutions, names like JP Morgan Chase and Goldman Sachs come to mind. It is astonishing how BlackRock has managed to remain relatively unknown to the public. While most companies strive to become notable and famous, BlackRock prefers working from the shadows, and there is a good reason for that. So, let's solve the mystery, i.e. BlackRock, and understand how this financial giant, on which presidents and banks rely during financial crises, has been successful in conquering the economic world and winning the top-rated company leadership award. Now for the most crucial question, who is the proprietor of this colossal firm? Who owns BlackRock, the business that shapes our future, news, and lives? The CEO, Larry Fink. Lawrence Fink co-founded BlackRock Inc., a multinational investment firm based in New York City in 1988. Fink, the CEO, and 7 other colleagues with experience in mortgage-backed securities, namely Robert S. Capito, Barbara Novick, Susan Wagner, Ben Golub, Ralph Schlostein, Hugh Frater, and Keith Anderson, founded the company to offer asset management services to institutional clients with a focus on risk management. Fink was born to a wealthy family in 1952 and spent his early years pursuing a career in politics. He later shifted his focus to banking and real estate when he realized his true passion was to earn a lot of money. Fink was a member of Kappa Beta Phi, a secret society best known for its surviving Wall Street chapter, composed of top financial executives. He used his connections from the society, and in 1976, at the age of 24, he started his career and landed his first job at First Boston, a New York-based investment bank, for a salary of $20,000. Fink was the driving force behind the establishment and growth of the mortgage-backed security market in the United States. This market was relatively unknown back then. 3 years after joining First Boston, he made waves in the financial world by becoming the highest-earning employee, generating more than $1 billion in just a year. He became the youngest chief executive at the age of 27 and quickly rose through the ranks and was on pace to become the company's CEO. But, unfortunately for Fink, one blunder on his part and he would go from being the king of Wall Street to becoming the laughingstock of Wall Street. When bond interest rates plummeted dramatically in 1986, Fink's department lost $100 million in a matter of months because of his wrong prediction on interest rates. He thus became an outsider at the firm and eventually resigned in 1988. BlackRock, a startup story. It is often said that failure is just a stepping stone to success, and Larry Fink is a living example of this. Just like a phoenix that rises from its ashes, Fink too rose from this significant setback undeterred and used it to his advantage, learning from it and establishing a company that dealt with risk management by concentrating on developing a risk analytics team. That same year, Fink assembled a team of former First Boston employees and other colleagues of his to create his own company. He needed money to run this business. Blackstone, which should not be mistaken for BlackRock, is a leading private global investment firm that provided Fink and a company with a $5 million line of credit. By 1989, the company's assets had quadrupled to $2.7 billion, and in just 5 years, BlackRock grew from a $5 million corporation to one valued at more than $8 billion. BlackRock went public on October 1, 1999, and grew organically and through acquisitions. Merrill Lynch Investment Managers became BlackRock's first significant acquisition in 2006, increasing the company's assets to over $1 trillion and expanding BlackRock's retail and global reach. BlackRock made the majority of its money through managing investments for third-party clients, typically organizations such as public pension plans, endowments, and foundations. Almost 60% of its total assets under management are for institutional investors, most of which are stock market-linked products. To achieve this, BlackRock created Aladdin, probably the most important invention in the stock market world that would change how stocks would be viewed and traded. Creation of Aladdin. When catastrophe struck again in 1994 in the shape of a rapid increase in interest rates, investors worldwide lost $1.5 trillion. However, BlackRock did not suffer a significant loss, and it was then that the corporation realized it was sitting on a gold mine. That gold mine was called Aladdin, an acronym for Asset, Liability, Debt, and Derivative Investment Network, a creation of BlackRock which monitors markets and prevents disasters by teaming engineers, mathematicians, developers, and technology together to manage funds. It is a platform that incorporates 5,000 computers that operate around the clock and strives to oversee the world's economic conditions by analyzing investment risks, maintaining portfolios, and handling trade. The BlackRock software could track millions of daily transactions and evaluate each asset in his client's stock holdings to determine how they might be influenced by even minor economic changes. Aladdin was initially designed to only handle BlackRock operations, but given its usefulness and popularity, it is now being used by many BlackRock clients to manage their investments. From 1999 onwards, the corporation began selling Aladdin to other businesses, and by 2000, it was seen as the best user-friendly investment management solution. Since the 2008 financial crisis, demand for Aladdin has only skyrocketed. It was summoned by every major bank, the heads of the Federal Reserve, and the United States Treasury. Now the backbone of risk management systems, Aladdin will have handled more than $21.6 trillion in assets for countless clients. Fink was awarded as top-rated CEO, and his influence has only continued to grow in the last decade. BlackRock now has 70 offices in 30 countries and clients in 100 countries worldwide. They handle the retirement accounts of over 35 million Americans, about 10% of the total US population, and are one of the biggest lenders in the world. They have become so reputable and successful in their growth that they have helped the US government boost the country's economy during times of crisis. Conclusion. From a modest company to a major corporation, this lucrative firm holds voting rights and shares in several of Europe's biggest companies, including those in banking, energy, oil, and gas. And yet, the reclusive Larry Fink and his corporation itself are not well known, raising the question of whether it is a purposeful attempt at maintaining an ambiguous status, and if so, why? As the saying goes, with great power comes great responsibility, and there couldn't possibly be a greater responsibility when one owns a portion of the world. BlackRock owns vital information and can do whatever it pleases to do with it. By using Aladdin, BlackRock collects data from insurance companies, banks, and other important institutions and gets insight into financial assets worth $20 trillion. This in itself is very menacing, but it doesn't end there. If Aladdin's network is ever hacked, the global economy might suffer instantly and catastrophically. BlackRock rents out its software to the highest bidders in the market, primarily hedge funds and mega banks, effectively putting BlackRock at the top of the ladder and allowing them to govern the economy as they see fit, resulting in a dangerous monopoly. Perhaps this is their motivation for remaining in the shadows, working silently beneath the radar while the rest of the world lives in blissful ignorance.